This algo pulled in about $2,400 after swaps over the past 77 days including weekends. That's around $31 a day on average. The best algos are reliable and consistent, and this algo is designed to adapt to market conditions, automate your trading, smooth the drawdowns using portfolio theory, and scaling risk that adapts to your account as the balance changes, making it great for compounding your savings long term. Let's take a look at what other EAs have. Couldn't you just buy any EA? They close tiny trades and profits, which eventually get away on the wrong side, leading to massive drawdowns. Trends Algo EA looks for reasonable price movements. Martingale approach scales into losing positions, bringing massive risk. Trends Algo EA is limited to one trade per direction per symbol. Single symbol approach, putting pressure on performance of that single asset. The Trends Algo EA runs across multiple symbols and multiple directions. Runs buy or sell in all market conditions. Trends Algo EA identifies the market condition based on slope and filters out trades that don't suit the market condition at present. Who am I? Trading forex since 2008 and coding algorithms since 2014, I've got years of experience developing and understanding the market, programming expert advisors, and running a live algorithmic portfolio, along with running tests, backtesting, and what to look out for that gives fake readings, which many of these EAs on the market provide. I've tested thousands of combinations, optimized against hundreds of thousands of parameters, and live tested many expert advisors on MT5 on a real account. I prefer to run my algorithms on a VPS as it frees up my computer to work on other things without accidentally closing MT5 or disrupting the speed of the algo when running other programs. Let's take a look at why automated trading. Manual trading requires the utmost care, focus, and diligence when it comes to placing orders, managing risk, and looking for opportunities. The mental bias. Mental biases can come into effect, causing forced opportunities, over-risking, or even under-risking. Watching your equity rise and fall, especially being in loss, can hinder your judgment in the moment as panic sets in. Automated trading allows you to step away from the trading element and simply focus on designing a good strategy. Effort. Manual trading requires manual input. Since the dream of trading returns is based around gaining more freedom, avoiding manual effort is critical to saving you time to work on your own projects or simply enjoy your time. Automated trading is somewhat a set and forget, working while you sleep and while you enjoy your day. Of course, there's the element of periodically keeping your VPS up to date, but it's far more easier than manual trading. For coders and testers, it allows you to continue building additional trading robots to add to your portfolio. Let's take a deeper dive into comparing to other algorithms. So become casino-like. Automated trading allows for the development and testing of multiple strategies across multiple pairs to the point where trading these manually by an individual will be near impossible. Having multiple strategies makes you less reliant on a single strategy and more casino-like by introducing many tables to the positive expectancy. In a casino, a table may be losing money, however, the other three tables could be earning slightly more, hedging the risk and drawing an overall return for the casino. With this approach, rather than holding a single strategy through a drawdown period, multiple strategies in a portfolio should help to smooth the curve and reduce the negative mental effect of losing trade after trade, since there are more likely to be winners in the mix across a portfolio. Hedged drawdowns. Given a portfolio like this would be near impossible to manage, the automated trading portfolio also helps to hedge drawdowns by trading inversely correlated pairs in opposing directions. These inverse trades would have the expectancy of a positive outcome long term, but rather than taking a complete loss on a single strategy, the inverse trade may help to smooth the drawdown effect of the losing position. This can be a big help when it comes to staying within prop firm drawdown limits. No to martingale. Many EAs and trading systems use martingale, but don't be fooled. Martingale relies on the market shifting in your favour eventually, but the market can be unforgiving. So the Trends Algo EA does not use martingale. Remember the casino analogy? Martingale is the gambler banking on a single hand being played over and over, doubling down the risk. The chances of hitting insolvency approach him far quicker than a hedged bet across many tables for low risk. Instead, the Trends Algo EA spreads risk across multiple pairs and directions based on positive expectancy through testing and strategic design. Filtering market conditions. Market conditions can greatly vary the outcome of a strategy. Bullish markets provide a positive environment for buy positions, while bearish markets provide a positive environment for short positions. The Trends Algo EA uses technical identification of market conditions to ensure it only trades in the environment that should generally provide that positive outcome. This concept is where many algorithms miss out on long-term viability, since they fail to filter out market conditions, meaning they will perform very well in certain periods, but fail dismally when the market condition changes. About the Trends Algo EA. So Bollinger Bands are used to identify entry points based on value. Slope is used to determine the type of market condition we are in. This concept works on the trend is your friend approach to filter out unfavorable market conditions. Risk is based on an algorithm of the account balance divided by lot div. And lot div is a user input which defaults to 100,000, meaning that the lots traded will be account balance divided by lot div, giving the lots that will be traded. The average holding time for trades ranges from a few days up to a couple of weeks. Forex pairs tests: GBP AUD, Euro CAD, New Zealand CAD, Pound New Zealand, AUD USD, New Zealand Yen, and USD CAD. What do you need to get started? You will need an MT5 trading account. You could use a demo if you wish, and a computer, laptop, or VPS to run a program. A VPS is definitely preferred because the MT5 has to stay open on your computer at all times for it to work. Do I have to use a particular broker? You can use any broker you choose, provided they offer MT5 access. Can I use it on multiple accounts with one subscription? Yes, you can request multiple licenses if you own several trading accounts under one subscription, within reason of course. Can I close trades or turn off the EA easily? You can manage the trades opened by the Trends EA as you please. If you wish to turn off the EA for a period of time or indefinitely, you can easily do that by removing the EA from the charts or turning off the auto trading button on the MT5 platform. You can manage your risk and lot sizing using the lot div input. This EA doesn't work on a mobile phone, which is why you need the VPS or computer. Once it's set up, it's ideal that you monitor your trading account to make sure everything's working as it should. Updates do need to be performed on the VPS from time to time as well. Aside from that, there's very little upkeep required. Just remember that the EA can lose money. It's a real investment, and the markets don't always respect what should happen or what has worked in the past. So always take care when investing in anything that you see. The algorithm doesn't have access to your funds as such. It simply monitors the market based on the inputs and has no control over your money itself. To get the Trends Algo EA for MT5, head to the link in the description below